By now, you've definitely heard of it.
Bitcoin is the most exciting asset in financial markets.
But what is it? And more importantly, how can you make money with it? If you're new to crypto and want to gain the necessary knowledge that can potentially make you thousands, hundreds of thousands, if not even millions of dollars, then this might be the most important video that you will ever watch. In this video, you'll get the step-by-step guide into Bitcoin and cryptocurrencies and learn the foundation that you need in order to succeed in this space. Countless people have made fortunes with crypto, and the opportunity is still here. In fact, we are extremely lucky to be given one more chance to really make it. Why is now the best time to start? It's because the world's largest asset managers and biggest businesses in the entire world are getting into this space and crypto and Bitcoin right now. This means that if you get in now, you'll be investing alongside the billionaires that are investing into this new market right now. Recently, a Bitcoin ETF was just launched with BlackRock and Fidelity leading the way. This means that institutions can now invest into Bitcoin. These companies have trillions of dollars, and if even just a small percentage of that gets put into crypto, then the crypto market will absolutely skyrocket. And if you look at history and see what happened when the gold ETF was approved, you'll see that that was the spark that ignited the meteoric rise in gold's price, taking the market cap from around $1 trillion to over $16 trillion just a few years later. If Bitcoin follows in gold's path, which everything is saying that it's doing, then one Bitcoin should be worth hundreds of thousands of dollars. So if you want to be part of this new wave of technology and investors, make sure that you watch this entire video through. Also, hit that like button and subscribe to the channel so that you get the information that you need in order to succeed in crypto. Now, before we get started, let me tell you a little bit about myself. My name is Lewis, and I've been in crypto for nearly 8 years now. I founded a crypto trading and educational company called Crypto Elite, made and lost over 7 figures in crypto, held a position as the lead analyst at a multi-million-dollar corporation, and publicly sold the last crypto cycle. I'm a trader, and I'm currently traveling around the world, trading from my laptop and providing market updates and making videos. Now, one thing that I wish that I had when I first got started was a guide to help me navigate this space and learn everything that you're going to learn in this video. I recommend taking some notes and maybe watching this a few times, because this video and the information in it could save you and potentially make you thousands, if not hundreds of thousands of dollars. So here's what we're going to cover, and also there's timestamps below in case you want to just move to a certain section. We already went over the introduction and why now is the best time to be getting into crypto. Next up, we're going to go into the basics so that you have a solid foundation that you could build off of. Also, we'll talk about why crypto is so special. Then we'll be going into different crypto types and terminology like blockchain, crypto mining, and more. After that, we'll jump into all of the different ways that you can make money with crypto, how I make money with crypto, and how you can too. To do this, you'll need to know about wallets and exchanges, so we'll get into that. Now, there will be links to all of the different things that I recommend in the description below. So if you're going to sign up for anything, use those links, and most of the times there are bonuses that are attached to them, which are literally free money. Then once all of the basics are covered, we'll dive into part 2, where we'll go into trading and investing into cryptocurrencies. In this section, you'll see what to consider before investing into crypto, and then learn the different ways to analyze the market. These include fundamental analysis, technical analysis, and more. You'll also get a very solid game plan on how you could build out your crypto portfolio. This will take into account your current financial situation, your risk tolerance, and more. And I'll also touch base on crypto taxes. Now, just as a disclaimer, I'm not a financial advisor, I'm not an accountant, I'm not a lawyer, and nothing I share is financial or legal advice. I'm just sharing my experience that I've gathered from nearly 8 years in this space. A lot of people lose money in crypto, and I make these videos in hopes that people will watch them, learn from them, and protect themselves and their capital from the bad actors and scams that are rampant in the crypto space. Finally, at the end of this video, I'll sum everything up, give you a quick start guide that you could use to get started, share with you a bunch of crypto resources, and then give you some last things that you should know when you're going on your crypto journey. So why should you even learn about crypto? Well, there are 3 main reasons. The first is that you can make a lot of money. With knowledge, action, and patience, you can make life-changing gains in crypto. The second is that crypto is the future. Crypto is transforming the way that value is moved, stored, and transferred around the globe. Eventually, everything will be tokenized. And third, believe it or not, you're still early. This technology is still new and not even close to being mainstream yet. This is good because by the time it is, it's too late. Now, let's talk about returns. Everyone knows that if you invested into Apple or Amazon or Tesla early on, that you would have made millions of dollars. There's actually a calculator that shows you what you would have made if you invested into Bitcoin early. And you could see if you put $1,000 into Bitcoin in 2011, you would have made over $141 million. If you put $1,000 into Bitcoin in 2012, you would have made over $8 million. 2013 would have made you over $3 million. Investing in 2014 would have returned over 50 times your investment today. Where else can you get 50 times your investment in just 10 years? And the crazy thing is that in 2015, Bitcoin actually experienced a huge crash, meaning that if you invested $1,000 in 2015, you could have made over 130 times your initial investment. That equates to over $130,000. $1,000 invested in 2016 is over $100,000 now. 2017 is worth over $40,000. 2018 is a 10x. 2019 is another 10x. And even if you invested just 4 years ago, you already would be up 4 times your initial investment. Bitcoin is on its way to making new all-time highs. And by the time you're watching this video, it most likely already has. And once that happens, that means that every single person who bought Bitcoin, no matter when they bought it, is now in profit. Now, a key point to understand is that even though Bitcoin's returns are diminishing, they're still way better than most anything else that you can invest into. Plus, there are still thousands of cryptocurrencies that have the potential to 100x or more. And just to show you how real this could be, there's a cryptocurrency called Caspa that I put into my portfolio that did nearly a 100x in just the last 2 years alone. Yes, that means that if you put $100 into it, it's worth nearly $10,000 today. So no, you didn't miss out, and no, it's not too late. And by learning the material in this video, you could also potentially catch these 20x, 50x, or maybe even 100x moves. So now let's go into the cryptocurrency basics and talk about what they are. I'm gonna keep it super simple for you. First off, let's define what a currency is. Well, a currency is a medium of exchange that facilitates the buying and selling of goods and services. It serves as a unit of account, a store of value, and a standard of deferred payment. The too long didn't read version of that is that a currency is what we use to pay for things. So now, what's a crypto? Crypto, short for cryptography, is simply a way that computers secure information. So a cryptocurrency is simply a currency that uses cryptography to securely process transactions. Yes, you could go way deeper into what cryptocurrencies actually are, but this will get you started. Now, the awesome thing about crypto, or at least what I think is awesome about it, is that it really forces you to think about money. What it is, where it came from, the history of it, and how we ended up with the dollar and Apple Pay and Google Pay and credit cards and everything that we use today. There have been so many forms of money throughout history. In 9000 BC, people used cattle. In 1200 BC, cowrie shells were used as money. In 1000 BC, there were bronze and copper coins. 500 years later, silver was introduced. Then there was leather money. And all the way back in the year 806, the Song dynasty of China was actually using paper money. Eventually, in the 1800s, gold became the standard form of money. It was such a good form of money that when dollar bills were invented, each dollar was actually backed by gold. This was called the gold standard and lasted until the 1930s when we started moving money away from the gold standard. In 1971, President Richard Nixon took the US off of the gold standard and fiat currency became the norm. Now, the US dollar isn't backed by gold, but rather it's backed by the US military and the faith in the system. In fact, the word fiat comes from the Latin root, which means it shall be, or trust in the decree. It's really a faith-based system that we have in the US dollar right now. Eventually, we started using credit cards and debit cards. And now we use our phones to pay for everything. And there's even scanners that scan your hand in order to pay for groceries. The natural progression of things is pushing us into this digital world. And in fact, 90% of all money today that's circulating is actually digital already. It's nothing but ones and zeros in the bank's databases. Bitcoin is the money of the internet. It was born in the digital age, made for people living in the digital age. It is the world's digital currency, and it's only a matter of time before Bitcoin becomes a normal currency that's used around the world just in everyday life. And eventually, many cryptocurrencies will be able to be used, but that's still a pretty long ways away. Now, why is this likely to happen? And what are some other important aspects about cryptocurrencies? Well, number one is that cryptocurrencies, especially Bitcoin, are actually a hedge against inflation. The reason why your groceries and your gas bills and all these other bills keep on costing you more and more and more is because of inflation. Over the last 8 years, trillions of dollars have been printed basically out of thin air. A lot of this money is going to fund wars, and a lot of it is going to corrupt politicians, business insiders, and other corrupt individuals and officials. And as bad as it is in the US, other countries are actually way worse. And the people in these countries can use Bitcoin to keep their money safe without having it erode due to inflation. And in fact, while I'm making this video, Bitcoin has just surpassed the all-time highs in over 14 different countries' currencies. Along with it being a hedge against inflation, Bitcoin and other cryptocurrencies are also decentralized. This means that there's no single entity, no single person, individual, company, corporation, fund, or anything that actually controls Bitcoin. Everything about it is based off of computer code that can't be changed. This means that human error and manipulation are reduced to near zero. Instead of one entity approving or not approving a transaction, with Bitcoin, millions of nodes or computers need to verify the transactions for them to be valid. And because millions of computers are helping to run this network, the Bitcoin network is up 24/7, 365. This is in stark contrast to the top-down method that traditional finance uses. Also, Bitcoin and other cryptocurrency transactions are recorded on a public ledger. This is called the blockchain, and we'll talk about this in just a minute, but the important thing to know is that all of the transactions are created by the computers that are helping to run the network, and because they're all using the same code, that literally reduces the ability to create fraud or commit fraud on the Bitcoin network itself to zero. And you'll understand this more in just a minute. You could see every single Bitcoin transaction all the way back to the very, very first transaction called the Genesis transaction by going on what we call blockchain explorers. And so if you go to blockchain.com and then click on the Explorer tab, you could actually click latest blocks and you could see all of the different transactions that are actually occurring on the Bitcoin network. And so we've mentioned a few reasons why Bitcoin and cryptocurrencies are so special, but there's actually a lot more. You see, Bitcoin was the first invention to ever allow someone to send something of value over the internet to someone else without a third-party intermediary. No one knows who invented Bitcoin, which really adds to the allure of the whole Bitcoin lore and just the history of Bitcoin. Bitcoin's use case is super simple. It's money of the internet. It's not trying to do anything complex, and that's what makes it so unique and so powerful. It does one thing, and it does that one thing better than anything else. But as you know, Bitcoin's not the only crypto. So a few years after Bitcoin was invented, a 19-year-old Russian-Canadian super genius named Vitalik Buterin invented something called Ethereum. And Ethereum is cool because Ethereum has something called smart contracts, which let you program the money in order to actually do things. For example, you could tokenize an apartment, put that onto the blockchain, have multiple people invest into it, and then when the rent money comes in the form of cryptocurrencies, you could program it so that each investor into the apartment gets the percentage of the amount of rent money that they're owed every single time the rent money comes in, automatically, no third party, no checks, no any nonsense. It's all just programmed before the actual money comes in. And then thanks to smart contracts, it all just happens like that. Essentially, smart contracts let you put in if-then statements with money, which basically means that you could code the money for many use cases and eliminate human corruption and human error. And just to be more clear about how Bitcoin and cryptocurrencies give you more control over your money, you need to think about how we send and receive money over the internet today. If you want to send someone money, you'll send them some money through PayPal or Cash App or Venmo or some type of intermediary. That's fine, except for the fact that these intermediaries and these companies are single points of control that, number one, can be hacked, and number two, have control over your money and can turn off your account at any time they want, question you whenever they want, hold your funds for whatever reason they deem necessary, and they don't even have to tell you, and pretty much they have total control over your money. Also, a lot of these apps aren't available in every single country, so it's not really a worldwide thing. Cryptocurrencies allow for peer-to-peer transactions. It's like going into your wallet and handing your friend $10. Except you could hand that $10 to anyone in the world at any time you want with no restrictions, and it goes directly from your wallet into theirs. So I hope you could see just how powerful Bitcoin and cryptocurrencies actually are. Even if you wanted to send an international wire transfer, you'd have to go to the bank while the bank is open, you'd have to fill out forms, you'd have to meet with people if it's over a certain amount of money, you'd have to meet with people regardless just so that you could give them your IDs and everything like that. And it would take days because it would have to go through clearinghouses, or if you speed it up for a fee, you could do that, but it would still take possibly hours, if not much longer. And with cryptocurrency, you literally just press a button and it's there. You know, it's so much easier. It's so much better. It's literally 100 times better than the traditional financial system. And so just a little bit of a recap of Bitcoin. It was created in 2008 after the Great Financial Crisis. The creator is anonymous, and it goes by Satoshi Nakamoto. It is 100% digital and online, so there's no physical Bitcoin. It's decentralized, which means that it's not controlled by any individual or institution, and the trust is in the math or the code. And the great thing about this is that just how anyone in the world can access the internet with an internet connection, anyone in the world can open and create a Bitcoin wallet and be part and opt in to the Bitcoin network. There's no boundaries. It's completely inclusive. It doesn't see race or class or anything. It simply allows anyone at any time to opt in. And like we said, it's borderless, which means that Bitcoin can be sent to anyone, anywhere in the world at any time, day or night. And it's divisible also, which means that you can own a fraction of a Bitcoin. You don't have to have an entire Bitcoin. And so Bitcoins are divided into what we call sats, which is short for Satoshis, and one Bitcoin contains 100 million Satoshis. The same way how $1 contains 100 pennies. And so if you're trying to buy USD or US dollars, you don't need to buy $1. You could buy 1 penny worth. You could also do the same with Bitcoin. You could buy a few Satoshis worth, or you could get tipped a few Satoshis worth, or you could work for Satoshis. There are plenty of ways to actually get Bitcoin. You don't need to buy one whole Bitcoin at a time. And so even when one Bitcoin is worth $1 million USD, you'll still be able to buy plenty of sats. Some other things to know is that Bitcoin actually makes up over 50% of the entire cryptocurrency market. Everything about Bitcoin is open source. Everyone knows how it works and what to expect. And every transaction is recorded in a semi-public ledger called the blockchain that can't be altered. Now, it's semi-public because the wallet number is shown and whatever transaction happened is shown, but the owner of the wallet is not. So if Bob sent Sally $10 from wallet number 2, then it will show that $10 worth of Bitcoin was sent from wallet number 2, but it won't say that the wallet belongs to Bob, and it won't say that the receiving wallet belongs to Sally. So the blockchain shows the transactions, but it doesn't publicly display who actually owns the wallets and the money that's in the wallets. So you have all this info on Bitcoin, but how does it actually work? Well, Bitcoins are mined through computers, and the miners help run the network. You could think of mining Bitcoin on the internet, on computers, the same as mining for gold. Except, of course, it's online. And so every single transaction that happens on the Bitcoin network is validated by these miners. And these miners get a small transaction fee for helping to run the network. Now, there are millions of computers around the world that are trying to validate transactions and mine Bitcoin. Now, Once enough transactions are validated, they're clumped together into what's known as a block. This block is then encrypted, making it extremely difficult to alter. And then every time a new block is created, it is attached to the old block, and that is encrypted as well. And so if any transaction is altered with after it actually happens, all of the miners will see this and reject it because they'll know that it's not valid. And this is what makes Bitcoin one of the most, if not the most secure way to transact value over the internet in the entire world. In fact, people used to say it's set in stone to refer to something permanent, but in the future, people will probably say it's set in the blockchain. And so Bitcoin uses proof of work, but that requires a lot of energy. Other cryptocurrencies wanted to come up with something that lowered the cost of energy, and so they came up with something called proof of stake. Proof of stake is 99% more energy efficient and faster than proof of work. With proof of stake, participants stake their crypto and basically put it into pools and don't touch it, and then those pools help to actually validate the transaction and keep the network running, and those pools get rewards from the network for keeping it running. The upside to this is that in order to keep the network running, people have to actually buy the cryptocurrency and stake it in these pools. And because they spent so much money on coins and it's worth so much, that is a huge incentive for them to do everything right and make sure that the network is running smoothly. And the cool thing is that you used to have to actually buy a lot of crypto in order to stake it, but now there are exchanges like Coinbase and other places that you can actually stake even just a small amount of crypto and earn yield completely passively. And Ethereum is the biggest cryptocurrency that's the most well-known that uses proof of stake. One thing to know though is that there are actually thousands upon thousands of cryptocurrencies, and many of them use different technologies other than proof of work or proof of stake. The technology that Bitcoin uses, which is proof of work, is incredibly secure, but it is massively energy intensive and it's pretty hard to replicate. Also, it's not really the fastest. So that's what Bitcoin uses. And then we have Ethereum and some other cryptocurrencies that use proof of stake, which is much less energy intensive and also faster. And still, there's other cryptocurrencies that use hybrid technologies and other technologies in order to create a faster, safer, more reliable, less energy intensive type of network. And many of these cryptocurrencies are taking on specific sectors, narrowing down to solve very specific problems in industries such as banking, healthcare, real estate, supply chains, social media, gaming, AI, and more. And so now that you know the basics about Bitcoin and Ethereum, proof of work and proof of stake, now we can dive a little bit deeper into the different types of cryptos and terminology. Now, this section will help you understand crypto more than 99% of the population. And this is the introduction of what you need to know if you want to make massive gains in crypto. Just like how the people in my group made over 50 times their investment in Caspa in just under 2 years, or 10x their investment in a cryptocurrency called Cubic in just a few months, this is the knowledge that you need in order to make these massive gains in crypto. So first off, what are altcoins? Well, every coin that's not Bitcoin is considered an altcoin, which is short for alternative cryptocurrency. So there's Bitcoin and then there's alternative cryptos or altcoins. And just like stocks, all cryptocurrencies have their name and also a shortened version of the name called a ticker symbol that's between 1 and 5 letters long and usually has a $ preceding it. And it's actually called a ticker symbol because there was this little machine that was a tape machine in the stock market where the ticker symbols would be printed off of that the stockbrokers and the people trading in the stock market would actually use to, buy and sell stocks and know what they're buying and know what they're selling and everything like that. Now, the ticker symbol for Tesla, for instance, is $TSLA. The ticker symbol for Apple, Apple Incorporated, is $AAPL. And some popular cryptocurrencies and their ticker symbols are Solana with the ticker symbol SOL, Ripple with the ticker symbol XRP, Chainlink, which has the ticker symbol LINK, Dogecoin, which of course is Doge, and then there's Tether USDT, which is USDT. Now, there are tens of thousands of altcoins. And the thing is, 99% of them are useless and are probably going to go to zero. However, some will revolutionize the world, and you can make a lot of money on a lot of different coins. Now, just how in stocks we have growth stocks, dividend stocks, value stocks, tech stocks, etc. In crypto, we have Bitcoin, layer ones, layer twos, stable coins, meme coins, you know the meme coins, exchange tokens, metaverse and gaming tokens, AI coins, things called liquid staking tokens, real world asset coins, launch pads, and a whole bunch more. And the thing is that in the crypto space, if you're trading, you need to know what narrative or what category the coins that you're trading fall under. Because many times crypto is run strictly by narratives. And if you could get into the right narrative at the right time, many times all of those coins ends up pumping super hard. Right now, there's the AI or artificial intelligence narrative, but I believe that in the future, there's going to be real world asset narratives and also just basically a whole lot of other narratives that you could jump into. So knowing the different categories of the different cryptocurrencies that you invest into is super important. Next up, we have stable coins. And these are another type of crypto that you have to know about. The two main ones are USDC and USDT. And the purpose of stablecoins is to be stable at $1. So it's basically pegged to $1. And this allows you to actually move US dollars, even though it's not really US dollars, it's USDT or USDC, but it allows you to move the equivalent of US dollars throughout the system seamlessly. And there are other stable coins, and people try to invent other stable coins, but honestly, I believe that they're all scams and I would not touch them. Next up, we have meme coins, which I'm sure you know of. So there's Dogecoin, and then there's another coin called Shiba Inu. And these are the two largest meme coins in the space right now. And these tokens are driven by the internet culture and meme culture. And whether you like it or not, this meme internet culture has accrued over $20 billion and has made so many people millionaires and multimillionaires. And I used to think that it was honestly just like so stupid. And why would you invest into these meme coins? They don't do anything. They have no real life utility, but people speculate and they put a lot of money into these coins. And I remember I made a bet with Dogecoin years ago that if I held it, would have been worth over $7 million on that single trade. But I exited early because I thought it was sort of stupid. And so I did not make really any money on that trade. But I've definitely learned my lesson, I'll tell you that much. And now I never underestimate the power of the memes. Now, we also have metaverse tokens. And the metaverse is simply a loosely defined term that is referring to three-dimensional virtual worlds in which users are represented by avatars and they all interact with each other. And there's the Apple Vision Pros, there's the Meta Quest, there's all of these virtual reality headsets and things that are coming out and being invented that it's very, very obvious that we are moving into this VR/ augmented reality world as more of this technology gets developed. And there's a high probability that a lot of these crypto-based metaverse tokens will actually do really, really well, if only for the hype and the narrative. Some of these tokens are used for gaming tokens to buy things like skins or weapons for your character. Other ones are used to buy virtual land. Some are used to buy clothing for your character. And even Nike and Adidas have virtual reality clothing that you could actually purchase. And then some other tokens are used to unlock different areas of the metaverse. It's all pretty crazy. And if you've ever seen the movie Ready Player One, which by the way is a great movie, highly recommend it, this is pretty much what we're moving towards. And so if you want to know all of the different categories in crypto, you could actually go to this website called coingecko.com, and under the cryptocurrencies tab, you could go down to categories, click it, and then this will show you all of the different categories available. So in alphabetical order, you could see there are quite a lot of different categories, from artificial intelligence down to exchanges. We even have dog themed coins like Doge and WIF, gaming tokens, L1s, L2s, L3s, and honestly, just a whole lot more. And so one more thing that you should know about in this market are NFTs, or non-fungible tokens, which I know that you've probably already seen all over the place. I know Justin Bieber and some other people actually bought a ton of NFTs back in 2021. And the thing to understand is that NFTs are not cryptocurrencies. They're separate. So NFTs stand for non-fungible token. And the word fungible literally just means that you could exchange one thing for another thing, and it's exactly the same. So if I give you $1 and you give me $1, it's the same exact thing. It's the same, it's worth the same. There's no difference, right? And if I transfer you 1 Bitcoin and you transfer me 1 Bitcoin, it's the same. Nothing changed. However, non-fungible means that they're different. It's not the same. It means that each piece is unique. And so every single NFT is unique. This is the same way how no two Ferraris are exactly the same. There's always going to be something different about them, whether it's the color or the type of Ferrari or the mileage or the history. And so you can make money with NFTs, and it's a totally different route to go in. I personally prefer trading and investing into actual cryptocurrencies and companies, but there are definitely ways to make money with NFTs. The only issue I have with them is that you need a buyer and a seller. And sometimes if there's no one that wants to buy the NFT, you're sort of stuck with it and you can't just liquidate it like that. And so that is a little bit more risk that I don't really like to take on when it comes to NFTs. But I know plenty of people who love NFTs, and I have a bunch of NFTs myself. And so that is a primer on the different categories of crypto. And like I mentioned, this is something that you really need to get down if you want to truly excel in the crypto space. And to learn even more terms and get the 10 cryptocurrencies that I'm most bullish on for this bull market, you could grab the PDF by clicking the link in the description below, and you'll get all of that plus this entire presentation for free. And so here's everything that you learned so far in this video. And now we could get to the part that you've probably all been waiting for, which is how to make money in crypto. And so what we'll cover in this section includes different ways you can make money with crypto, some risks involved, how to actually get started buying and investing into crypto, how you could store your crypto on exchanges and wallets, and then some more specific things, particularly about trading crypto. And so I found that there's about 7 different ways that you can make money with crypto. These include investing, which is long-term value appreciation, trading, which is buying and selling in under 1 year, staking, which we talked about, where you get rewarded for helping to run the network, mining, where you get rewarded for helping to run the network as well. And then there's a whole category called decentralized finance, or DeFi, which allows you to do things like airdrop farming, providing liquidity on DeFi platforms, lending out tokens for interest, and yield farming. And then of course, you could become a developer, or you could help to develop a cryptocurrency or work on a cryptocurrency project. And then of course, there's creating content. So going into investing, I consider investing when you buy an asset, wait for at least 1 year, it appreciates in value, and then if you decide to sell it, then you'll sell it and you'll make the gain. This is exactly the same thing that people do in stocks or even in real estate, where they'll buy a house, it appreciates in value, they'll sell the house, buy something else that has greater potential for appreciation, and they'll keep on doing that. And so you could do the same exact thing with cryptocurrencies, where you buy a cryptocurrency, it goes up in value, you sell it, and then maybe you take the money out of the market, or you put that money into a different cryptocurrency that has even more potential. I say that it's investing if you hold it for at least 1 year, because if you hold an asset for longer than 1 year, then when you sell it, you'll get taxed at the lower tax rate of what's called long-term capital gains taxes. If you buy and sell something in under 1 year, then you'll get hit with what's called short-term capital gains taxes, which could potentially be up to twice the amount of taxes compared to the longer-term capital gains taxes. And what I've learned from reading so many books on investing and watching so many interviews It's really this long-term investing approach that has made people so wealthy. And if you just imagine all of the people that bought Bitcoin in 2011, all the way up to say 2015, and they held it and they did nothing with it for 10 years or 15 years, these people have millions and millions and millions of dollars. While a lot of the people who bought and sold and thought that they could outplay the market, they don't really have that much now. And I remember there was a bet by Warren Buffett where he bet multiple hedge funds that within a 10-year period, the S&P 500 will outperform all of these hedge funds. And almost every single one of those hedge funds ended up losing to Warren Buffett, as the S&P 500 did end up outperforming the vast majority of them. So a lot of the times, the best thing that you could do is simply research amazing projects, find things with great fundamentals, go into them, and then just back off and really don't touch the investments for a long period of time until it's worth much more. This is just something that I've learned and why I have a particular account strictly for that purpose. And so that's investing. We also have trading, which I like to define as buying and selling cryptocurrency or any asset really in under 1 year because of the tax implications. Also with trading, you can do what's known as shorting the coin or shorting the stock, where you actually make money if the stock goes down or if the cryptocurrency goes down. But that is a more advanced topic. The great thing about trading is that if you actually understand it and you get really good at it, you could potentially make a lot of money in a very short period of time, whether that's 3 months, 6 months, 1 year, 2 years, whatever it ends up being. And also, if you happen to see an opportunity that is a very quick opportunity and you have a bunch of money sitting there, then you could go in to that opportunity, make a bunch of money, pull out, and then put it back into your longer term accounts. And that's always a possibility too. There are tons of ways that you could actually make money in crypto and tons of different strategies, which I'll go over later in this video. But I personally trade, and I do think that knowing and understanding how to trade and knowing and understanding technical analysis and the different things that come with trading is important, even if it's not your main long-term investing account. And so here's a trading example. This particular cryptocurrency went up 34% in just 42 days. So if you bought where the green arrow is and you sold where the red arrow is, you would have made 34% in under 2 months, which is quite astonishing, right? And these opportunities happen all the time, which is why I think that understanding trading is important. Now, just as a side note on taxes, I know that I've been mentioning that you have to pay your taxes on crypto, which you absolutely do, but I've actually seen a lot of ways that you can drastically reduce the amount of taxes that you pay on your capital gains. And so if you're interested in that, comment capital below. So comment the word capital below in the comment sections, and I'll be sure to either send you information on that or create a more in-depth video on these particular tax strategies that I've seen and heard from these high-level tax professionals. Now, going back to trading, there's 4 main types of trading. There's position trading, which is anywhere from 1 month to 1 year. There's swing trading, which is anywhere from 24 hours to 1 month. There's day trading, which is anywhere from, say, 5 minutes to 24 hours. And then there's scalping, which is anywhere from microseconds using computers or high frequency trading up to maybe 5 minutes. And I have other videos that go over all of these things. Also, if you're interested in learning how to trade, head over to cryptoleap.com, and over there is a full step-by-step course on how to actually trade cryptocurrencies. Now, the next way to make money is through staking, and we already talked about this. It's where you earn that passive income by putting your crypto up into these vaults, into these pools, and then you earn income by helping to run the network. And you could easily stake your crypto on exchanges such as Coinbase. And then of course we have mining, but the things with mining is that it's expensive and it's somewhat complicated, and you need to either buy a ton of actual physical equipment or use a mining cloud service that you trust. But there's a lot of scams out there that say that they're mining cloud services. And so it's pretty hard to trust most of them. And now the next way to make money is through DeFi, or decentralized finance. So DeFi, short for decentralized finance, is the new wave of financial tools created thanks to crypto. So the great thing about DeFi is that it's all done without third parties or paperwork or stupid bureaucracies or made up rules. I remember back in 2021, I tried to get a mortgage because the rates were so low. It was obviously the intelligent decision to get a mortgage back then, but I couldn't because I didn't have 2 years of provable taxable income because I made all of my money in the bull market with crypto in such a short period of time that I couldn't actually get a mortgage, even though I could buy the place that I wanted outright. And that was so backwards to me. And I just hate all of that. So DeFi bypasses all of that BS and lets you take out loans and lets you lend money and lets you borrow money and lets you buy and sell and trade even without KYC, which is know your customer. There's just so many benefits to using DeFi. I will say though, that there are a lot of scams in DeFi and you need to be super, super careful with how you approach it. The cool thing about DeFi though, is that it's super simple. It works with a set of code. So basically you know exactly what should happen and what's going to happen before you ever actually, borrow money or lend money or put your money into something. You know exactly what the rules are because it's all based on code and there's zero human interaction or room for human error. So DeFi is a really awesome thing that's going to continue to get bigger and bigger and bigger. And just think about how backwards buying a home versus renting is today. And I love this meme. It says, buying a house is like, we have no way of knowing you'll pay back this mortgage of $500 a month. And then you're like, I've been paying my landlord $1,000 a month. And then they're like, why can't you save up $25,000 to reassure us that you can afford $500? And then you're like, because I've been paying my landlord $1,000 a month. It's like so stupid, So I actually love DeFi because you just do it, you just do what you want to do. Forget the credit scores, forget sending sensitive information like your tax reports and bank statements to the bank, and forget dealing with people that don't know what they're doing or make things overly complicated or waste countless hours or even days or even weeks waiting to get approved for something. Just forget all of that. DeFi solves all of that problem. It makes things so much better. Pretty much with DeFi, if you have enough to fulfill the requirements of what you want, you could just do it. You press a few buttons and it works. All you need to do is hop on a website, connect your wallet, press a couple buttons, and bada bing, bada boom, you're good. And so just as an example, the most popular DeFi application, it's called Uniswap. And so moving on from my soapbox, but sticking with DeFi, we need to talk about airdrops. So crypto companies, they love to send out free money to people. It's actually sort of crazy. If you use the platforms that people are building in DeFi and you actually support their network and support their community, a lot of the times you could get free tokens in the form of airdrops that could potentially be worth a lot of money. I also remember getting some money from the government because of the whole COVID thing, but I got more money for free from airdrops in crypto than I ever did from the government. The sad thing is that the US government is actually making it pretty difficult for US citizens to get airdrops. But if you have a citizenship in another country, I would be farming airdrops and looking into these things every single day because the potential is really, really, really great, especially if you don't have a lot of money to begin with. And so airdrops are a great way for people with no money to get started in crypto, especially if they live outside of the US. Now, I just talked about all of these different ways that you can make money in crypto, and they're all amazing, but they do come with their risks. And so with investing, coins can lose their value over time. Just how like you can invest into a stock and it loses its value over time, so can cryptocurrencies. And when it comes to trading, if you don't know what you're doing or you're bad at it, you could lose a lot of money. And also with trading, sometimes you could do everything right, put on a great trade, but the market just doesn't work in your favor and you end up losing a lot of money. And I'd actually say that one of the worst parts about trading is selling for a profit something that if you would have just held would have been worth way, 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 way more. Like I said, that's what happened with my Doge trade. I hardly made any money on it, but it would have been worth millions of dollars if I just held it. So yeah, trading is a very, very tricky game, but if you get good at it, you can make a lot of money. And also it's pretty fun. The risk with staking your cryptocurrency is that you might need to hold the crypto that you're staking for an extended period of time. And during that time, if the crypto falls drastically in value, that will leave you with much less value that you actually have. And so if you do stake your cryptocurrency, I would look for ways to stake it without needing to lock it up for long periods of time. And then when it comes to mining, the profits are very, very thin. There's a lot of upfront cost. It's high electricity cost, and you need to find trustworthy mining companies if you go that route. It's just more complicated. And then, of course, when it comes to DeFi, there are things called rug pulls. Now, rug pulls are exactly what it sounds like. It's like pulling the rug out from underneath you, and it's basically, it leaves you with zero. And I have experienced this at least 2 times where I would invest money into something, and they would just completely pull the rug out from underneath me, and I lost everything that I had in those projects. There's also projects called honeypots where they will actually write in the code that you cannot sell. And then you'll invest, say, $100, and then that $100 will go to 1,000. And then you'll be like, oh, wow, this is amazing. Let me, sell and take my profits. You go to do it, and the code simply won't allow you to do it. It is the wild, wild west in decentralized finance in the DeFi space. And so you do have to be extremely, extremely careful with DeFi. And so those are some risks. Now, how do you actually lower your risks in all these things? Well, for trading and investing, you need to learn about market cycles. This is something that has to be done. You have to learn about market cycles. And I have other videos on market cycles that you should definitely watch. I'll put the links to those in the description below. Also, learn the fundamentals of technical analysis. Basically, don't buy high and sell low. You want to buy low and sell high. Learn at least a little about technical analysis, especially stuff like support and resistance. Once again, I have videos on these things, so click the description below and watch those videos because it will be extremely helpful, especially if you're new to crypto and new to trading and investing in general. Also, make sure to do some research before buying something. So many people just ape into these coins because they see an influencer talk about it or they see someone on Twitter say something. Actually go to the website, go into the Telegram groups and the Discord groups, research a little bit about the crypto before just going right into it, Look at who the founders are, see if it's actually a good project, and if it is, then go into it if you want. But don't just blindly ape into everything that you see. And then also, make sure to use stop losses if that's part of your strategy. And stop losses basically help prevent you from losing a lot of money if the price keeps on going down. So if something starts going down 10% and you cut your losses with a stop loss, and then it goes down another 50%, you saved so much money. Even though you sold at a loss, you still have capital that you could play with. And that's the name of the game when it comes to investing and trading. The name of the game is capital preservation and making sure that you have the funds and the means necessary that you need when the time arises that gives you the best opportunity. You don't need to be in the market 24/7, okay? You could wait for the good times and then go in during the good times, make a ton of money, pull it all out, and then go make your money somewhere else. That is probably one of the best ways to make money and to play the markets in general. And so those are how to mitigate risk with trading and investing. When it comes to staking, only use reputable exchanges such as Coinbase. When it comes to mining, same thing, only use reputable services. When it comes to DeFi, make sure you safeguard your password, never share your passwords, double check the transactions every single time, have multiple wallets that you could use for different dApps, which are decentralized applications. Do your research before jumping into DeFi stuff. And then for other things, don't fall for impersonators. I will never DM you. I will never go into your DMs, ask you, how's your trading going? Give me money, anything like that. There are so many scammers that are impersonating me and other crypto influencers, if you want to call it that, trying to get people to send them Bitcoin. Because if you send Bitcoin to someone, like I mentioned, it's the same thing as if pulling the $10 out of your pocket and giving it to them. There's no real way to reverse the transaction. It's not like a credit card. So please don't fall for any of the scams of the impersonators. Also, don't click on any links that are unfamiliar. There are so many times where people's information gets stolen, such as their email addresses and things like that. And then they'll get an email from a scammer saying, oh, you won this prize, or XYZ, you need to check your account. And then they will send you a link. And if you click on that link, it will open up a page to, for instance, an exchange. However, that exchange is not the real thing. It is a fake website that the scammers use to quote unquote phish you. And when you get phished, that's when you type your information into this fake website. The scammers get a hold of that information, and then they go to the real website, put your information in, and then take all your money. So never click on links that you do not know where they came from. Now, speaking about wallets and exchanges in DeFi, these are things that you have to know about in order to actually interact with these networks. So let's go into that right now. And what we'll cover are centralized exchanges, decentralized exchanges, which we already brushed up on, and different types of crypto wallets. And so when it comes to centralized exchanges, this is how the vast majority of people buy their crypto. A crypto exchange is simply a platform that lets you buy and sell crypto. Now, the main exchange in the US is Coinbase. This is the most trusted exchange in the United States, and it's the one that I think that most people in the United States should sign up for because it's the most secure. This is a publicly traded company on the US stock exchange. It's audited, it's the safest, and everyone needs to give them their information in order to protect against money laundering. The thing is, when you put your money on centralized exchanges, you are trusting that exchange. You're trusting them in holding your money and keeping it safe. You can transfer your money, you can transfer your crypto from the exchange to your actual wallet, and that makes it so that you own it and it's in your control. But you have to have the responsibility and ownership of that wallet, and you need to safeguard it. You need to safeguard your passwords and everything about it, because if you lose it, then that's on you. The thing about exchanges is that a lot of times you won't find every single coin that you want to buy on just one exchange. Personally, I have multiple exchanges that I use because I want to buy multiple different cryptocurrencies, and not all of the cryptos that I want to buy are on Coinbase or Kraken or any of these other exchanges that I want to use. So sometimes I sign up for an exchange just to get one coin, on that exchange. And eventually, if you get deep into crypto, you'll probably sign up for a lot of different exchanges. It's not necessary, but if you want to get certain coins before they get listed on these top tier exchanges like Coinbase, then you'll probably end up doing that. And so some centralized exchanges include Coinbase, Binance, MEXC, and KuCoin. And those are the exchanges. And so we also have what's known as crypto wallets. And so crypto wallets, they're basically like regular wallets, except they're on the internet, and you could do a lot of stuff with them. The difference between a crypto wallet that's on the internet and a regular wallet in real life is that the in real life wallet literally holds your money, while the crypto wallets only hold the keys that give you access to your crypto, which is actually on the blockchain. And so if you have a wallet in real life and you lose that wallet, it's gone and all the money in it's gone. However, if you have a crypto wallet on your computer or on your phone, and then you lose your computer or your phone gets stolen or something like that happens, or it crashes or you break it, as long as you have the password and what's known as the private key and the seed phrase for your wallet, you could just install the wallet onto a new computer or onto a new phone. It doesn't matter because the money is not actually inside of the crypto wallet. The crypto wallet simply gives you access to the coins that are always on the blockchain within the ethereal realm of the internet. And so every wallet has what's known as a public key and a private key. The public key is just that. It's public. You could give this out the same way how you give out your address if you want someone to send you mail, or you give out your email address or username for, PayPal or Venmo or something like that. If you want someone to send you money, you give out your public address to your wallet if you want someone to send you cryptocurrencies. However, you never, ever share your private address or your private key. This needs to be kept secret at all times. You could write this down. You could put it in a password manager. You could do something with it to make sure that it stays safe, because whoever has access to the private keys has access to your wallet and ultimately to your coins. And if you lose your private key, even if you have the wallet on your computer, if you can't log into it for some reason or another, then you're out of luck. Your coins will simply just be on the blockchain and never move. And so you have your public key, you have your private key, and you have your password. Also, you have what's known as a 12-word seed phrase, which helps to recover your wallet in case, anything gets lost or stolen or broken. And when you create new wallets, whether it's MetaMask, which is a very popular one, or Zerion, which is one that I like, it actually walks you through the process. So you don't really need to worry about anything. You'll know it once you actually start signing up. And so there are 3 types of wallets. There's the custodial wallets, which are the exchange wallets. There's hot wallets, which you have on your computer and your phone. And then there's cold wallets, which are hardware wallets, which are literally just a piece of hardware like a USB stick or something like that, that hold the keys needed to access your crypto. And so a custodial wallet is simply when someone else, aka a custodian, controls your private keys and seed phrases. All centralized exchanges are custodial wallets, and you allow them to hold and safeguard your funds when you sign up for the exchange. These are automatically set up for you in the background whenever you use a centralized exchange. You don't know your private keys for these centralized custodial wallets. And then there's hot wallets. And the reason why they're called hot wallets is because they're always connected to the internet. So you install hot wallets on your computer or your phone, and you can install these wallets as extensions on, Chrome or Brave browser or something like that, all for free. And some popular ones, like I mentioned, are MetaMask, Zerion. Coinbase has the Coinbase wallet itself. There's the Phantom wallet. There's plenty of different wallets to choose from. And then finally, for the cold wallets, these are physical devices not connected to the internet except for when you transact with them. Now, these are somewhat expensive, and the main ones are called Trezor, Ledger. There's also Arculus, Tangem, and a couple other ones. And so now you know about the centralized exchanges like Coinbase. You know about the wallets like Zerion and MetaMask. And you know about the decentralized exchanges. A decentralized exchange simply means that it's an exchange that doesn't have one owner or one company or one thing actually ruling it. It's decentralized, so it's for everyone to use, no matter where they are, no restrictions, nothing like that. And the way that they operate is actually through smart contracts. Just like how we talked about smart contracts allow you to program the money, well, these decentralized exchanges use smart contracts to create the trades, to buy and sell, to lend, to borrow, to do everything. And that's what we talked about before. And that's why they're really cool, because everything is just run by code and pretty much everything works. And when it comes to these decentralized exchanges, or DEXs for short, they don't hold your money the same way how centralized exchanges hold your money. So when you buy Bitcoin in Coinbase, for example, Coinbase holds that Bitcoin for you. When you buy something on a decentralized exchange, such as Uniswap, you have the money or the Ethereum or whatever cryptocurrency you're using in your wallet. So it's in your wallet. It interacts with the exchange. The smart contract comes in, swaps out your cryptocurrency for the one that you're buying, and everything goes back to your wallet, or really everything just stays in your wallet, and everything is just transacted through the smart contracts, through the decentralized exchange. But the decentralized exchange never actually holds your money. With DEXs, you simply have to have money in your wallet, and then you use that to interact with the DEX. And that's how it works. And so you have all of these different options of where to hold your crypto and where to store your crypto. So how do a lot of people do this? Like, what's some recommendations, or what's something that you could actually do? Well, personally, I have multiple accounts on multiple different exchanges for multiple different purposes. I have a hardware wallet for crypto that I never want to touch ever. This is like, buy a Bitcoin, or, however much of a Bitcoin you could buy, put it on the hardware wallet and literally never touch it. Put it into a bank vault or something like that, and just have it forever. That's why you use hardware wallets. It's the main reason. It's for things and coins that you really just don't ever want to touch ever. So I have a hardware wallet for that. And then I have a hot wallet like MetaMask or Zerion that I use strictly for coins that are only available on decentralized exchanges. And then I have many exchanges that I use simply because the coins that I want are only available on those exchanges. And then I like to use another exchange called Bybit, which is used for leverage trading, although Coinbase is actually starting to allow people to use leverage trade and trade futures, which is a whole nother topic in and of itself, and not something that I recommend for beginners. And then lastly, I actually like to use the app Cash App for my dollar cost averaging into Bitcoin. And so I've been dollar cost averaging into Bitcoin using Cash App for over 6 years now. Every single week without fail, I take money automatically from my bank and I put it into Bitcoin. I buy Bitcoin with it using Cash App, and it only does Bitcoin. It doesn't do anything else. And so that's why I like Cash App. And so I have that for that. And also I have other accounts on other platforms, which I'll link below. And also I'll send a link in the PDF if you sign up for that, with all of the different exchanges and things that I use personally to help me navigate the crypto space, and also make sure that my portfolio is diversified and also secure. One thing to know though is that no matter what exchange you use, always have two-factor authentication on. Don't use SMS text verification for your verification methods. Use two-factor authentication using Google Authenticator or the Authy app. And with everything that we just went over, now it's time to go into part 2, which is going to be talking about trading and investing into crypto. And so just as a recap, in part 1, we went over why you should be investing into crypto, why right now is one of the best times to be investing into it, some cryptocurrency basics like why is it special and what is it, the different categories of cryptocurrencies and different crypto terminology. And then we went over different wallets and exchanges. And if you want to get a step-by-step guide on how to sign up for Coinbase, you can actually click the link in the description, and I'll post a video for that down in the description and also in the comments below. Now for part 2, trading and investing into cryptocurrency, we're going to be going over what to consider before investing into cryptocurrencies, and then we're going to be building out a crypto portfolio, how to actually research cryptocurrencies and do fundamental analysis. Then we'll dive a little bit into the charts and talk about technical analysis, and then I'll give you a bunch of really good crypto resources, and then go over a few last-minute things that you should know if you're getting into crypto. So when you're building out a crypto portfolio, there's 2 things that you need to keep in mind, and these are the 2 things that should determine whether you're going to invest into a cryptocurrency or not. Those 2 things are fundamental analysis and technical analysis. Now, fundamental analysis is a method used to evaluate the intrinsic value of a financial asset, such as stocks, bonds, or currencies, by examining various economic, financial, and qualitative factors that could affect its value. Pretty much the goal of fundamental analysis is to determine whether an asset is overvalued or undervalued in the market. And when it comes to crypto, it is a little bit different than stocks. You don't really have these things like price to earnings ratios, and a lot of it is run off of narrative, but there are some fundamental things that you should be looking at when investing into cryptocurrencies. So some of them include the founders and the team members. So do you think they have what it takes? Did they actually create things in the past? Do they have a reputation? Have the founders done anything in traditional finance, or have they built any businesses in the real world outside of crypto? What connections do they have? A lot of these things can go into your fundamental analysis. And then there is a use case. So a lot of the times, even if a coin doesn't even have a use case, it will shoot up in value. But if you can find a coin with a real legitimate use case, then that of course can be a reason to get into it, especially if it's something that will help a lot of people in the market. Also, what's the technology? It's funny because I used to get into crypto because of the technology. That was why I originally got into it, for the technology and a couple other reasons. But I did realize that a lot of the times the tech isn't as important as you might think, because people are speculating in this market. And a lot of the times, if it just has a narrative and there's good marketing and some other things that happen to get sprinkled in there, the coin will do extremely, extremely well, despite whether it has the most advanced technology ever or it's just a copy paste of something else. So the tech is something to look into, but when it comes to speculation and price appreciation and everything like that, it's not particularly the number one thing that I look at anymore. Another thing that you could look at is basically the uniqueness. Does it bring something new to the market, or is it just a copycat of something else? Because if it does bring something unique to the market and brand new, then it does have a good chance to actually take off. And a lot of the times, if something new comes out into the market, it will actually do really, really well. And then a lot of other coins will just pop up copying it. And then those could actually do pretty okay as well. Another thing that people look at is what's known as the tokenomics. So the tokenomics basically describe how the tokens are distributed. So do the founders have 99% of the tokens, or are the tokens distributed to the founders, the venture capitalists, the seed round raisers, and all of these other people, and there's only a little sliver for the general population? Or was it a fair launched cryptocurrency and everyone has the opportunity to get in at a fair price? There's lots of different things that you can look at when it comes to tokenomics. And another thing to consider is how easy it is to get. You know, I do love Coinbase, but a lot of the times, by the time coins are listed on Coinbase, they've already actually ran up quite substantially. So if there's a coin and it's pretty difficult to get because it's on maybe a tier 3 or tier 4 exchange, then if it has the other things that are necessary for it to be a high conviction play, such as the founders being really good, the tech being really good, it being fair launched and everything else, then that could mean that it's hard for a lot of people to actually get the cryptocurrency and a lot of people won't be buying into it, but it has a lot of potential because the fundamentals are there. So that's why a lot of people like to go and dive into these very low market cap cryptocurrencies that are maybe 1 to 10 to even $50 million in market cap, because a lot of times those are harder to get, but if the fundamentals are right, then they have immense potential, such as 10x, 20x, 50x, maybe even 100x, which quite frankly, you're not going to get with Bitcoin or Ethereum or many other coins in any short amount of time. A couple other things that you could look at when it comes to researching cryptocurrencies and looking at the fundamentals are the roadmap, and you could see how they actually created a roadmap and are they on track to accomplish their goals and to hit the milestones that they put out. If they put out a roadmap and they're hitting the milestones one by one, you know the team is working hard, and you could say with more confidence that it's probably a good cryptocurrency with at least a solid team and a hard working team that's actually pushing forward no matter what. Also, if they're pushing forward during the bear markets, that's actually a really good indication that the people behind the coin are serious and that the coin has a lot of potential to grow once the bull market actually starts. And then finally, one of the most important things to know is that almost every single cryptocurrency has what's known as a white paper, which basically explains everything about the crypto. So I highly recommend reading the white paper, or if it's too long, because sometimes they're very, very long, you can read what's known as the light paper, which is only a few pages long and gives the general breakdown of what the coin's about, what problems it's trying to solve, who the team is, and a lot of the information that you need in order to make an informed decision. And so here's a checklist that I made on how to actually do fundamental analysis. It involves looking through the coin's website, at least reading the light paper, like I just mentioned, looking at the founders and the team, checking them on LinkedIn or other resources or other social medias, and then analyzing the use case and comparing it with other similar cryptos, and then doing everything else that I mentioned in this checklist. And so if you want this checklist, I'll have it down below in the description. You could get it along with all of the different slides in this presentation. And now the other factor that I feel like everyone should look at when actually deciding to buy into a cryptocurrency or any asset is something that I like to do, which is called technical analysis. And so in finance, technical analysis is when you use the information on the charts to come up with predictions as to where you think the price will move based on past data. And TA, it's used in crypto, it's used in stocks, it's used in Forex, it's used in commodities, it's used in all of the different markets. And 3 golden rules when it comes to technical analysis are that the market discounts everything at certain times, and it also overvalues everything at certain times. Also, prices move in trends. So if you see something going up and up and up, it's more likely to continue going up. And if you see something going down and down and down, it's more likely to continue going down. And then finally, number 3, the most important one, is that history repeats itself. I saw a movie called Margin Call a few years ago, which was really, really good. And at the end of the movie, the hedge fund manager listed off at least a dozen different financial crashes. And he just explained that the same thing happens over and over and over and over and over again. We have millions of years of evolution that have programmed our brains as humans to be emotional and have greed and fear and euphoria and all of the different emotions that we have when we're making money, losing money, or getting excited or getting scared and everything like that. So those emotions are not going to change. And the herd mentality is not going to change. The markets will continue to move how they continue to move, and the cycles will continue over and over and over again. I got into crypto in 2017 because I saw that the same exact cycle happened in 2015. And I saw that the same exact cycle in crypto happened back in 2013, I believe. And the same thing happened in the stock market and in the housing market in 2008, and the stock market with the internet in 2000 and 2001. It just keeps on repeating itself over and over and over again. So history repeats. Let's not forget it. And let's use that to our advantage to understand when to get in and when to get out of the markets. And so if you could study the history of the markets, you could study fundamental analysis, and you know how to look at the charts and determine where the best prices to buy and sell things are, and you combine all of these things together, that is the trifecta that can potentially make you a lot of money. And so if you want to start with technical analysis, you have to look at the charts because that's what it's all about. You have to figure out what candlesticks are, support and resistance levels, and other basic technical analysis concepts. I highly recommend watching YouTube videos on this, maybe picking up a few books on technical analysis, or just diving into the charts yourself and try to figure it out yourself. I have a ton of videos covering a lot of different topics, and I will be continuing to actually push out more videos on technical analysis. So definitely watch those. I'll put those links in the description below. Also, you can just go onto my channel and see all of the videos I have on technical analysis. Additionally, if you want everything laid out for you step by step by step, you can go to cryptoelite.com, and there is a course available that literally teaches you everything that I know about trading in a step-by-step, easy to understand video course. So if you want that, that is at cryptoelite.com, and I highly recommend getting that. And so if you don't want to just jump around from video to video to video on YouTube without any structure, then I highly recommend going to cryptoelite.com and getting it just so that you could streamline your learning. Also, a great way to get really good really fast is to actually just go into the charts, chart everything out, and then join a community and post your charts in the community and ask for feedback. And then you could get help from people who have been doing this for years and years and years and who are experts in their field. And so if you want to join the Crypto Elite community, I would love to have you there, and you could post as many charts as you want in the Discord, and I will personally look at them and give my own feedback. And so I recommend just diving in and doing it consistently, day in and day out, and just looking at as many charts as you can, back testing as many things as you can, trying out different strategies, and joining a group to actually get feedback. I always recommend to have at least 2 accounts. I would have a long-term investment account, and I would have my trading account that I use to actively trade with. And the reason why I always want to have another account strictly for investing along with my trading account is because in crypto, you could find these hidden gems that could get you 10x or 20x or 50x returns. And that's not going to happen with trading, right? You're not going to just buy and sell and buy and sell and buy and sell and make 50x or 100x in a short period of time. You're going to make that 50x if you get into a fundamentally sound project and you wait and you have patience, and then eventually it blows up because of really good news, partnerships, and simply the market becoming bullish overall and more money flowing into the system. I remember I found a cryptocurrency called Quant Network back in 2018, just a couple weeks or maybe a few months after it was created. And I found out that the CEO worked with some of the biggest companies and financial institutions and even governments around the world. And he worked with them on financial instruments. And I thought, oh my God, the founder has so many different credentials. And the actual use case of the cryptocurrency was something that was really, really smart. So I ended up buying it at around $2, and it went all the way up to $400 just a few years later. And so that's the power of doing fundamental analysis and having these long-term high conviction plays. And so here's the rundown on how to actually find these hidden gems. The first thing that you should know is the different categories of crypto, and that's why I went over it earlier in this video. The next thing that I would do, I would go over to CoinGecko or coinmarketcap.com, and I would just start going through all of the different cryptocurrencies, looking at their websites, looking at their founders, looking at their use cases, and trying to get a gauge of which ones are actually legitimate and which ones aren't. I would also look into venture capitalist firms and see which coins they're investing into, because they have so many resources available to them that they will know whether or not it's a good investment, and they'll get into good things that you could sort of just piggyback off of. And one example of this is something called Optimism, which is an Ethereum scaling solution that Coinbase is actually using to create their own blockchain. And so if Coinbase is using Optimism to create something called Base, then I would think that Optimism, or OP for short, that's the ticker symbol, is probably a good bet, because Coinbase has so much funding and so many backers and so much potential like with it, that I think that anything that they're getting into is probably going to be a much safer bet compared to many other different options. And so there's venture capitalist arms like Coinbase Ventures or Sequoia Capital or Pantera Capital or Binance Labs, and all of these different things invest into different cryptos, and you could see what they're actually investing into simply by going to their website. Also, there is something called on-chain analysis, and now this is pretty detailed and a little bit advanced, but there are a few websites like Glassnode, Look into Bitcoin, and CryptoQuant that give you some crazy detailed information, such as the different wallet balances, the different transactions that are happening with the cryptocurrency, the long-term holders versus short-term holders, and just a lot of information that you could use to create some type of theory on whether or not the crypto is good to get into or not. And then lastly, probably the easiest thing to do is to simply join a community that does the research for you. You might be busy with your job or with school or with your family or with something else and don't have the time to dedicate every single day to the crypto market. And that's why joining a community that actually does have people actively involved in the crypto market every single day is a good idea, because you could just take their recommendations, do your own research into them, determine whether or not what they're recommending would actually be a good investment for you. And then if you choose to, you could choose on your own to actually invest into whatever they recommended. The one caveat that I will say to that is that there are a lot of communities out there that basically like to pump and dump. So they will buy the cryptocurrency well in advance and then push it out to their community and basically sell onto them. A lot of big YouTubers do this. A lot of big influencers in the crypto space do this. And I like to be as transparent as I possibly can with everything that I do. And so you do have to be careful depending on what group you actually join, and make sure that you do your research on the group and make sure that the person behind it is actually legitimate and not just trying to dump on their followers. And so now let's just take a step back and look at the big picture of everything to see how crypto could actually fit into your overall portfolio. Just a couple of quotes though. Trading crypto is not for the faint of heart. If you can't handle the 40% drawdowns, you don't deserve the 400% gains. And then another quote is, investing in crypto is not for the faint of heart. If you can't handle the 80% drawdowns, you don't deserve the 8,000% gains. Now, I literally just made these up right now, but it's so true, because a lot of the times the lower market cap coins, they could go down 80%, but then they'll jump up 8,000%. And even Bitcoin and Ethereum went down 40% or actually 70%, but now they're up hundreds of percent from the lows. And these are the biggest cryptocurrencies in the entire market. And a lot of people can't handle that and just get so emotional. So if you get so emotional that you can't handle the 40, 50, 60, 70, or 80% drawdowns that crypto comes with, then just stay out of this market. Don't even bother, okay? But if you have a good strategy and you could actually buy more on the dips, you could potentially make a lot of money. And so I just want to talk a little bit more about risk. So you can't talk about risk without reward, right? And so you can find countless things with little to no risk, right? You want the least amount of risk? Putting your cash under your mattress is not risky at all, except if there's a house fire or something like that, right? But it's not going to give you the gains that you're looking for. And you could always buy some bonds or some treasuries or something that gives you 5%. Just keep it in an actual savings account that gives you 5, 6, 7%, okay? That's totally okay, and a lot of people opt to do that. But the thing is, Bitcoin dropped 67% in 2022, and that is the least riskiest crypto, dropped 67%. However, it also went up 173% in 1 year. The fact of the matter is, you're not in crypto to play it safe. You're in crypto to make life-changing gains. And that simply doesn't happen without taking on risk. So if you can't handle the swings, then honestly, don't even bother. But if you can handle the swings, then you'll have the opportunity to make life-changing gains. It really depends on your individual circumstances, right? So crypto probably shouldn't make up 100% of your investment portfolio, no matter where you are, unless you have like $100 to your name and you're just trying to gamble and make it into a lot more money. And the other thing is that as your net worth grows, then you should diversify your investments. For me personally, from 2017 to 2021, I had 95% of every single dollar that I had in crypto. But the thing was, I didn't have personally a lot of money to actually invest, and I also had safety nets. However, after the bull market in 2021 came, I diversified, and now I have money in crypto, I have money in stocks, in Forex bonds, in real estate, and in a whole bunch of other assets, right? So it's important that you make your money in one vertical, and then you diversify once you actually make a lot of money. And a really good rule of thumb is that if you put your money into something, that once it does at least a 3x, then what you do is you pull out your initial investment plus 15% for taxes, and then everything that's left in there is the house's money, and it's totally risk-free. And so as I mentioned, as your net worth increases, having different investment vehicles will help to lower the risk. So everyone has different risk tolerances and different life circumstances, right? That will determine the optimal portfolio for them. And the other aspect that you need to think about when creating your portfolio is whether you want to hold it for the short term, for the long term, or whether you want to have lower risk or higher risk. And so for your longer term portfolio, it's a lot easier to manage and it takes a lot less time. So because basically you do research, you put your money into the different cryptocurrencies, and then you just let it ride, and you just let it ride until it reaches your targets, right? So this is typically a lot less stressful and a lot easier than day trading. And also a lot more people end up getting a lot more wealthy by having these longer term portfolios compared to trying to like get in and out of the market, which is why I like to always have that long-term portfolio as part of my overall strategy. And so what you need to think about is what percentage of your portfolio you want to be in that long-term holding portfolio, right? And also, are you okay with fluctuations of 50% plus? Because I've had coins that I've bought in my long-term portfolio because they were fundamentally sound, and they'd go down 50%, 60%, 70%, but then they rebounded and they went up 1,000%. So really, you have to be okay with just letting everything happen in that portfolio. Also, would you be able to add more as the prices go down? Because the cryptos and the assets that you have in this long-term portfolio should be fundamentally sound. So really, if the price goes down, you're getting it at a discount. And then finally, what's your sell strategy? You always need to have a sell strategy. Are you just going to play the market cycles, wait until it's a big bull market? Or are you going to have strict profit targets, such as 5x or 10x? This is going to require that you're more involved with the market. If you understand what's happening on a daily basis, that's actually better because crypto moves so freaking quickly. But the questions that you need to answer when it comes to your short-term portfolio are what percentage of your portfolio you want to be in that short-term trading portfolio, right? Also, do you have strategies? Like, are you going to simply buy at the support and sell at the resistance? Are you going to use moving averages, Fibonacci? What strategies are you going to use when it comes to your trading? Also, do you have a trading style, and what will you do with the profits? So are you just going to take the profits and then put them into new trades, or are you going to take your profits out of the market into USD and go buy stuff in real life? Or are you going to transfer the profits from your short-term trading into your long-term investment account? There's many different avenues that you could take when it comes to your profits. Then when it comes to lower risk or higher risk, well, Bitcoin and Ethereum are the two lowest risk cryptocurrencies because they're the biggest cryptocurrencies that are available. And obviously they have the most funding. Bitcoin has the ETF, Ethereum has a potential ETF. And so these are absolutely the least risky assets that you could have when it comes to actually being in crypto, right? And typically, the lower you go when it comes to market caps, the riskier the coin is. But this isn't always the case. And there's a lot more factors that you need to consider when it comes to risk compared to simply if it's a low market cap coin or a high market cap coin. And so Bitcoin and Ethereum were the low risk cryptocurrencies. And then we have medium risk. So many people say that the coins with the higher market caps are the safer plays and the coins with the lower market caps are the riskier plays. But this is really overly simplistic. The safer plays are the projects with the teams, the use case, the narrative, the tech, and the hype, okay? There are plenty of coins in the top 100 that I would never touch. And there are plenty of coins outside of the top 100 with 1/10 the market cap that I believe are safer and have incredibly more potential than the coins with the higher market caps. And so that's what you want to look for. Coins with a lot of potential with less risk. And that's mostly due to their fundamentals. And so don't just look at the market cap when determining whether something is risky or not risky, because there are a lot of other factors. Now, when it comes to the high risk plays, the DeFi coins are the most highest risk plays because anyone could just make any coin and just slap it onto a decentralized exchange, right? So you really need to do your research when it comes to decentralized cryptocurrencies or DeFi coins. And then once coins have under a $10 million market cap, that is when, okay, yes, it's very risky. Only because if something has under a $10 million market cap, it could be manipulated like that. So easily, anything could happen. So under 10 million, yes, that's very, very risky. And now a few things I want to talk about risk. So it really all depends about what's happening. So if you're a long-term investor, then almost anything can be extremely risky because you don't know what could happen in 5 years' time, let alone one. And if you're a short-term investor, there are times when even meme coins could be less risky than even the higher market cap coins based off of what's happening in the market at that time. And what I mean by this is that if there's a narrative that's playing out, then most of the coins that fall within that narrative will immediately have their risk reduced because there is a much higher chance that all of the different coins in that narrative will bounce up if they happen to fall. So if you know what's going on in the market and you're trading the market, you could adjust your short-term trades based off of the relative risk of what's happening at that particular time. And so as an example, maybe all of the gaming tokens are going up because there's a big narrative around the gaming tokens, right? But maybe the layer 1 tokens are going down. Well, if there's a gaming token with, say, half of the market cap of a layer 1 token, that gaming token at that particular time is less risky than the layer 1 token, even though it has half of the market cap, simply because all of the gaming tokens are going up and everyone is flooding into them. And this literally happened this year with AI tokens, right? All of the AI tokens were going up drastically and just moving up and up and up and up, while a lot of other tokens were just stagnant. So the risk on the AI tokens was lowered drastically because everyone was putting so much money into them that even if there was a drop, those tokens are the ones that would get bought up right away. The only thing that you need to worry about is that you actually get out once the prices go up and once the narrative changes, or maybe even a little bit before the narrative changes, which does require actively trading in the market. And then there's another thing that you need to consider when we're talking about risk, and that is where we are in the market cycle. Top of a market cycle, then buying Bitcoin at the absolute top is actually more risky than buying other coins, for instance, say Solana, at the bottom after the big crash and after things actually went down and things have been accumulating for a while. So depending on where we are in the market cycle, that also introduces or reduces a lot of the risk that you're taking on. And so what you have to understand is that the market cycles and where we are in the market cycles and where the price is more important than even the coin itself. And if you want to master investing, you must master market cycles. And so if there's anything that you get out of this video, it's to master market cycles. It's to research what market cycles are and how to actually play them, and to do a lot of research into the different market cycles for not just crypto, but also stocks, real estate, other assets, and just understand what it is and everything you can about market cycles. Because if you do, Then when there's another opportunity, just like there was in 2022, just like there was in 2009 and 2010 when the housing market crashed, just like there was in 2001 when the internet stocks like Amazon and Apple crashed, then you know, well, this is just a market cycle. This is just what happens every few years, maybe once a decade or maybe twice a decade, something like that. This always happens. So you'll be ready to actually invest into the good fundamental projects at that time. And that's how you can make a lot of money. And so as a summary of how you could build out your crypto portfolio, these are the questions that you need to answer. Number one is, what percentage of my portfolio is going to be in the long-term bucket? Number two is, what percentage of my portfolio is going to be in the short-term bucket? Number three is, what percentage of my portfolio is going to be dedicated to the lower risk coins such as Bitcoin and Ethereum? And then number four is, what percentage of my portfolio is going to be dedicated to the higher riskier plays such as the degen plays, the low cap meme coins, or leverage trading, or DeFi trading, or anything that is a little bit or a lot more riskier. And so as an example, maybe you want 80% in a long-term portfolio and 20% in a short-term trading portfolio. And what you'll do is you'll take out your initial investment at 3x for everything that's in your long-term portfolio. And in your long-term portfolio, maybe you have 30% in Bitcoin and 20% in ETH, and then 50% in altcoins. So it's basically 50% in the safer plays like Bitcoin and Ethereum, and then 50% in the altcoins. And then maybe in your short-term portfolio, you dedicate 50% of that to go into lower market cap cryptocurrencies that have a lot of potential that you just buy and you wait for them to go up. And then maybe the other half you play with leverage trading or something like that. Although that's not something that I recommend at all unless you actually know how to trade and you're familiar with technical analysis. And so now you know how to actually create a crypto portfolio. And if you want more personal guidance, feel free to join the Crypto Elite VIP and ask your questions in the VIP Discord, and I will be sure to answer every single one of them. All right, guys, so now we're going to talk about crypto taxes. And because this is a subject different from everything else that I've been talking about, I decided to switch studios. Just kidding, I ran out of time on the other one. Now, when it comes to crypto taxes, though, there's a few really important things that you need to know. I have seen people make millions of dollars and then lose it all and still owe the government taxes on what they made. This is the absolute last place that you want to be in, and this is why at the end of the year, you have to put away at least 30% of your gains into a separate account so that you could pay whatever you're going to owe for taxes. That is hands down the most important thing that you need to know when it comes to taxes in crypto. The second thing that you need to know is that crypto is taxed on every trade, whether it's from USD to crypto, from crypto to USD, or from crypto to crypto. For example, if you buy Bitcoin with USD and then sell it back to USD and you made money, then you're going to owe taxes on the gains that you made. Also, if you bought Bitcoin with USD and then the price of Bitcoin went up and then you traded the Bitcoin for Ethereum, you will owe taxes based on the gains that you made with Bitcoin. Even if Ethereum ends up going down, you'll still owe the taxes from the original gains that you made with Bitcoin. It doesn't matter that you didn't trade it to USD. You're still going to be taxed. Thirdly, everything gets taxed. Obviously, trades get taxed, but also money you get from airdrops get taxed, staking and mining rewards get taxed, buying goods and services or property with crypto, and pretty much all earned capital will get taxed. Fourth, we have to talk about short-term versus long-term capital gains taxes. If you hold a cryptocurrency for over 1 year, then you will be taxed at the long-term capital gains rate. If you buy and sell in under a year, then you'll be taxed at the short-term capital gains rate. Depending on where you are and what tax bracket you're in, the short-term capital gains rate could be more than twice as much as the long-term capital gains rate. Now, a lot of people will tell you to buy and hold for over 1 year simply to take advantage of the long-term capital gains rates. But because crypto is so volatile, that isn't always the best decision. Everything depends on when you buy. For example, if you bought Bitcoin at $40,000 last cycle and it went up to $69,000 in under 1 year and then you sold it, that would have been much better than holding it for the 1 year just to save on taxes, because the price ended up dropping over 70% after it hit the all-time highs. So any money that you would have saved on your taxes by waiting 1 year was completely wiped out when the actual price of Bitcoin dropped significantly. So I think that instead of taking short-term versus long-term capital gains, taxes, and the differences between them into account, you should just look at the market in general and the prices in general and buy and sell based off of that. The only time that you should take long-term versus short-term capital gains into account is if you've been holding a crypto for 11 months to just under 1 year. Because if waiting a few days or a few weeks could save you potentially 15 or 20% in taxes, then yes, take that into account. But if you have only had your crypto for a few months or even 8, 9, or even 10 months and have been holding it, it would be a lot wiser to either continue holding it or to sell it based on what the market is doing. Now, crypto taxes can be extremely difficult, but luckily, new software has come out over the last few years that have made things much easier. Because of how complex crypto is, trying to do your taxes manually is nearly impossible. Personally, I use a combination of crypto tax software and accountants. The tax software I use is called Coinly, and I'll have a link for that in the description, along with a link for my Discord that has a resource section where you could get the entire list of resources and things that I personally use for trading and investing into crypto. So if you want my entire list of resources, join the Crypto Elite Discord and you'll get all of that for free. And if you want to know who I use as accountants, you could reach out to me on Twitter or Instagram or send me a message on Discord, because I'm in my Discord every single day. So that's probably the fastest and easiest way to reach me and to get your questions answered. Now, the last thing that you need to know about crypto taxes is that if you are down significantly, you could sell for a loss and then realize that loss and then use it to offset any gains that you have for other investments. For example, if you invested in the stock market and you are up $20,000 and you invested into crypto and you're down $20,000 and it's the end of the year, you could sell your crypto for a $20,000 loss and then use that to offset the taxes that you'll owe on the $20,000 gains that you made in the stock market. And the cool thing is, you could buy back the crypto that you sold immediately after you sell it. If you do this, this could save you an immense amount of money and lower your tax burden drastically. Let's say, for example, you were down $300,000 in 2023. You sold everything and realized that $300,000 loss. You buy everything back, and then in 2024, you made $500,000. Let's say that you would normally owe $150,000 on the $500,000 gain that you made in 2024. But because you realized the $300K loss in 2023, you could use that against what you owe. So, because you realized the $300K loss, but you owe $150K in taxes, your losses would totally wipe out your tax obligations for 2024. Now, I do need to just reiterate here, I'm not a tax professional and you need to talk to an accountant to make sure everything you do is correct, but this is what I understand is possible through tax loss harvesting. The other thing is that new tax rules are being made and altered every single year, so hiring a tax professional is probably the best option, at least in my opinion. So now that you know a little bit about taxes and everything else that we covered in this video, I'm going to go over the steps that I would take if I were just getting started in crypto today. So what would I do if I was just starting out? The first thing that I would do if I was just starting out would be to open up a Coinbase account, or if I was outside of the US, I'd open up an account with Binance or Bybit. This process will require you to sign up with your email address, social security or identification number, address, and other form of documentation so that the exchange knows that it is you and then can help protect people against money laundering and possible scams. Sometimes your account will be immediately verified and other times it might take a day or two. Regardless, once you're verified, I'd hook my bank account up to the exchange and send money over to my account. When you send money to an exchange, you could buy and sell things immediately. but the money isn't really cleared and able to be withdrawn for at least a few days. So whether you're waiting to get verified or you're waiting for your money to clear, the next thing that I would do would be to dedicate a few days to watching as many videos and reading as many articles on crypto as you can. I would watch at least a few videos of Michael Saylor talking about Bitcoin, and I would watch at least 5 to 10 hours of videos like this one, where people explain what crypto is and how to invest and how to trade it. The third thing that I would do would be to create a plan. You should know exactly how much you want to invest, and you should know exactly how you want to invest and be able to answer all of these questions. Number one, how much money will you put into crypto? Number two, what will your investment strategy look like? Will you put everything you plan to invest into the market at once, which is called lump sum investing? Or will you spread it out over the course of a few weeks? Will you dollar cost average and simply buy every week on autopilot? Or will you throw in a big percentage immediately and then buy in every week or every paycheck after that initial investment? Another question you should ask is, what exchanges do you want to use? Do you want to just stick with Coinbase? Or do you want to use other exchanges to get access to other coins? Number three, how will you split up your investments? We talked about this before in terms of long-term investments versus trading. Also, do you want to actively trade or do you want to take a more passive approach? Another thing to ask yourself is, what will your research strategy look like? Obviously, you should research things on your own, but there's also plenty of groups out there that will do research and share the information in the group. We have dozens of people giving out alpha in the Crypto Elite VIP group, but there are plenty of groups out there that give out really good information. You could also find tons of useful information on Twitter if you could cut through the noise. Another tip that I would give would be to join a community. Trading and investing into crypto could be pretty lonely at times. By being part of a community, you could surround yourself with like-minded people who are on the same path as you. I've actually made some of my closest friends through the group chats and communities that I joined, and I've not only made friends through my Discord group, but I actually hired people to help me do research and analyze the markets who I only know because they joined my group. Communities are really cool because they give you access to things like experienced traders that can answer your questions and provide guidance, trading ideas, new relationships with like-minded people, and also videos on trading and investing to help you in your journey. Twitter is another thing that I would get familiar with if I was starting out. I would learn how to create lists and find people who know what they're talking about. There are many, many multimillionaires who are on Twitter that give out so much useful information. It takes a while to find them, but you could read their threads and soak up so much knowledge and alpha from what these accounts put out. It's sort of wild the amount of information that these random anonymous accounts will give out on Twitter. You'll be spending a lot of time on quote unquote crypto Twitter if you get into crypto. Many times the news will come out on Twitter or x.com first, so checking out could be very, very useful. With saying that, I do think there's a benefit to just cutting out all of the noise and to not use any social media. If you completely cut out social media, you could do all the research on your own or in a small group that you create with friends or other people in the space, and just not have other people's opinions on social media interfere with your decisions. Now we're getting into the end of the video. And with that, I'm going to give you crypto tips and information on how to stay safe while in crypto. Firstly, here are some best practices that you could follow. The number one thing is to always use two-factor authentication through Google Authentication or the Authy app. Do not use SMS text messaging for your two-factor authentication, because if you do, you're still susceptible to get hacked via SIM swap, where the hackers will call the phone company, pretend to be you, and then get access to your phone number. Then they could log in and get your authentication code. So use Google Authentication or the Authy app for 2FA. And make sure that you have 2FA on everything from your email address to the exchanges that you use. It's also recommended that you buy a second phone and put your 2FA on that along with your main phone. Then put your second phone in a really safe place. This is great because if you lose your main phone and you need to wipe it clean, then you'll have all of your 2FA codes on another device. At the very least, write down all of your authentication recovery codes and keep them in a very safe place. Trust me, losing your device that you use for 2FA and not having your recovery codes is a real pain in the butt. Also, I think that password managers are great because they let you have different, long, complex passwords for every single account. Things like 1Password, LastPass, and NordPass are all good password managers, in my opinion. Third is that you could use an encrypted email account from proton.me for your crypto accounts to keep everything separate. This isn't a necessity, but it could be a good idea. Fourth is to use a VPN like Nord or Proton VPN just to provide an extra layer of security. Now, once again, this isn't totally necessary, but it could be useful. Something that is necessary, though, is to always check the URL of every crypto site carefully so that you don't get phished. Phishing is when scammers will create a copy of the website and change one little letter so that it's hard to see. So you log into their fake site, put your information in, and then they have it and they use that to steal your funds. Six is to always check the name of the social media accounts that you follow or that follows you. There are countless impersonators pretending to be crypto influencers. They are trying to steal your money. If you type my name or CryptoLeet into Instagram or TikTok, you'll see hundreds of impersonators pretending to be me. I only have two accounts, at Louis Raskin and at CryptoLeet, and I never message anyone first. But these scammers will message people asking them if they trade crypto, and then what they'll do is they'll say that they have a trading bot or something that can make them money. Then they ask the victims to send them crypto, and of course, after anyone sends them anything, they just block their accounts and then they go ghost. So never send anyone any crypto because you're probably not going to get it back. Seven is to always double check the crypto addresses that you're sending your crypto to, ensuring that they are the same addresses and the same network. When you send crypto to another address, you copy and you paste a really long string of numbers and letters. And before you hit send, you should always look at the first 6 digits and the last 6 digits of both addresses and make sure that they're exactly the same. Hundreds of millions of dollars have been lost because people have accidentally sent their crypto to a wrong address. So double or even triple check the addresses every single time that you send crypto somewhere. Also, double check to make sure that you're sending the crypto over the right network. This is really important. Number 8 is to never click on any link from anything related to crypto that gets sent to your email or DM to you on Instagram, x.com, Discord, Telegram, or any other social media site unless you verify it first. Companies don't message you on social media for support tickets. They have internal email structures that they use for their support. So just ignore anything on social media when it comes to fake support chats or things like that. Number 9 is to never install any browser or plugins that claim to be affiliated with an exchange unless you verify it first. The key here is to verify. 10 is to never take any phone calls with anyone claiming to be a representative of any exchange. Remember, use their internal email services if needed. 11 is to never disclose your password, your private keys, or your two-factor authentication codes to anyone, like ever. Like there will be never a need for you to do that. Lastly, a few more tips that I would give out would be to store at least a portion of your crypto offline on a hardware wallet, track your portfolio using a portfolio tracker, track your trades using a trade tracker, track your taxes in a tax tracker like Coinly, never invest more than you're willing to lose, take care of your FOMO, your fear of missing out, and just don't do it. Do your own research before investing into anything, and take out your initial investments once your coins pull at least a 3x so that everything that is left in is simply risk-free. And that will do it for this video. If you have watched all the way to the end, first off, you're a real one. Thank you so much for that. Secondly, if you haven't hit that like button or subscribe, make sure you do that right now. Third, join the Discord. You could join the free one, or if you want access to all of the trades that I do, plus a lot more, you could join the VIP. Both the free and the VIP versions have the resource section that will give you everything that you need in order to get started and become an expert at trading and investing into crypto. Also, if you're watching this right now, comment the number 100 below and you'll be registered to take part in the giveaway where I'm giving away my course at cryptoleet.com, a lifetime membership to my VIP, and $100 USDT to the winner. Overall, that's over $5,000 worth of value. So comment 100 below to be automatically registered for the giveaway. Lastly, if you want to learn how to trade, I have different videos going over technical analysis, so I would highly recommend checking those out. Crypto has completely changed my life. The possibilities are endless. It's nothing but up from here, and we're only just getting started. So thank you so much for watching. You're awesome, and I'll see you in the next video.